Good morning, guys, and welcome to Trading Buddies. It is me today, obviously, so I am going to, I'm not sure what that is. I'm going to just set up my other Zoom so I can share screen with you guys. Oh, that's not right. Should already be in here somewhere. There we go. Where is it? There we go. Let's move that there, move that there. That's there. Right, we're going to have a look at the FTSE and have a look at a bit of gold as well. We got Ainsley coming in later, so actually maybe we'll leave gold until later on. But lots going on. You know, we got the US debt ceiling, which is going to be very, very difficult for equities. But we'll come down and have a look at the other messaging. It certainly seems that today we have got probably calls for where's Jeff? It seems we got calls for lower, but the market has just had a little bit of a boost to the upside. So I'm just going to get everything here sorted. There we go. There we go. Now we've obviously seen, let me just make sure that's set up and ready to go. There we go. Okay. Right, let's have a look at the charts and see what they are suggesting. Share this. There we go. Right, now you should be able to see the screen here. Okay, so firstly, on the monthly with the FTSE, now if we look at this, let's have a look at the trend line first, because that's the first thing that kind of comes up here, and it certainly comes to mind. This is the primary trend line. Hey, Paul, how you doing, buddy? Happy Wednesday. Do you know what? I don't know what it is about Wednesdays, but I don't really like Wednesdays. Not that I don't like to trade on a Wednesday, but there's something about Wednesdays. Maybe it's because it's the middle of the week. But Wednesdays aren't usually that favorable, just as an enjoyment day. Now, this is the trend line. Now, this is a primary trend line. Now, if you guys don't know about fractals and fractal theory, then what you are kind of always looking for is the longer term time frames to kind of break down. So you're looking for a trend, let's say, if you were using fractals, you look for a trend on the monthly, then look for the trend on the weekly, then look for the trend on the daily for them to all kind of line up. Now, the trend here on the monthly is definitely down. So the longer term time frame on the FTSE does suggest downside. Now, because it's a monthly chart, of course, this could take quite a long time to transpire, because if you think about a 5-minute chart, you might get a few 5-minute bars before it starts to go in the direction it suggests. And that could be the same with a monthly. It could take 12 months potentially, just getting caught in a bit of a range before it actually decides direction. Now you can see really here, we've kind of got a lack of direction. Now I'm going to leave this view on. I know you can't see amazingly well, but because we need this this bar down here, then I'm just going to leave this on. But you got one touch there, and what's happened is we made this low down here, and now we're looking where that lower high is, and this is an area that is very valid because of this trend line break and retest. Now the trend line may not be there. That's where there's some open water. But if we look at this point here and this point here, it may be, and I haven't done this yet, but let's see if that lines up, and it does. You see that lines up too, but that still leaves us in this situation here. Now I can also see there's a high here and a lower high here, so that's also going to give me, and I will just now change my view. I can also now start to look at this and say that is a trend line there. Sorry, the market's just opened up, so let's come back to this now. It does suggest so far that there's some downside coming here. For the fractals, we see a lower low here, and this area's got a bit messy, but let's see. But it does suggest that this could be a lower high from that point there. Now on the 4 hourly, we can see this head and shoulders pattern. So again, this is suggesting that that we do have a distribution pattern where people are potentially distributing their positions and liquidizing their positions and looking for downside. So things are pointing to lower now on the longer terms and longer terms time frames. Now, if we go down to the hourly, what's that suggesting? This here was the previous trend. So this is what we had on the hourlies, and we had this here, there. So this is all suggesting lower. So if this pops up, I'm going to take the short. Now I might just let's just have a look on the 15 to see where that short needs to come into play. The thing with it, again, we're looking at fractals. If you look at this this particular pattern here, this pattern here is a consolidation area, and we're in the buy zone on the 15. So I don't really want to trade it here, even though I think it's got a pretty good chance of coming through. So really, I need to try and find the best price on this shorter term time frame now. And if I try and do that, I'm going to go down to the 5 and just have a look and say, well, there's a price point here. If it can get there, it doesn't. I'm not sure it will. I think this one might crash to the downside, and I'm not going to trade it. I'm going to wait, and we'll look for. Well, one of the reasons I'm not going to trade it is that I find it a bit more difficult to concentrate when I'm just on my own here. But you can see that we are in this buy zone, so a dangerous place to sell, even though the market looks heavy, and it will probably go through this level and maybe see the lows again. But if that's to happen, we're going to get the same price with a near enough with a break and a retest. If it does break down here, then all of a sudden the sell zone becomes a buy zone because you've got a low and a retest of that point, and then we can see if we can get the money out of the market. But as I say, it looks pretty good for some downside today. It looks like it's on. So currently, what I'm looking for is to sell here, to sell at the high. So maybe a little. Actually, that would do. There's the hourly there. You see this here? There's a little bit of support there. Now let's just make sure that that works on the shorter term time frames. Doesn't work very well on the 15. It may well work on the 5 because of this little trend line here. So that's suggesting we could take it on at 7,000, and it's a round number as well. So I'm going to get ready to do that. Take that on at 7,000 instead and see what happens. See if it pops up. So it's around about 9-10 pips away from where we are here. Now, what I might also do is just bring in the pivots. Where are you? All right, I'll sneak this down just so it's not getting confusing. You can see the monthly pivots, the obvious place. I don't take trades before the market opens, and the reason for that is that I like the volatility. I like the potential for fast movement. 7,000 gets us to the low. That would be our 10 for the day, which would be great. So if it pops up here, I'm happy to take it. Let's just check on the dailies what the daily suggests, and the dailies are suggesting here actually, which is a little bit higher. Let's go back here. It's on support there. Hourly looks, yeah, that looks like a nice point there. So yeah, it's got to be 7,000 for me, even though I think the market's going to drop. I'm going to say I'm going to wait for the 7,000, or I am going to wait for the break and the retest. Now the break and the retest is here. So it needs to come down and pop back up again. The issue really as well is we've got data today, and it's difficult to know. I think yesterday's movements in the market, yesterday's situation in the market would have said that the market is going to get heavy. You know, the Nasdaq had a really nice boost. If we look around the other markets here, then we see that the Nasdaq yesterday. Look at this on the 4-hourly. Yesterday had a pretty good move to the upside, but that's also starting to shrink down. S&P is the same, where it's starting to shrink down. We'll go back to the clean chart now. No, we've got our levels. We don't need the other one. So yeah, S&P is the same here. So there's lots suggesting that the move. Look at that move back into this area here. And all it's done is hit this resistance point, and now it's starting to come down. So we may well start to see this waterfall effect where the market just drops away and becomes difficult to get on board. But we should be okay. You know, we're looking at shorter term time frame, so we should be okay to try and do it. Yields in the bond 10-year bond situation in America are pushing higher, and this is really down to the higher inflation expectations, and it's really putting a lot of pressure on markets. We'll have a look at oil as well. Now, I don't know whether you can see that. You can't see that, so I'm going to make sure I change that in a moment. Let's have a look at oil, because oil has really started to take off to the upside. And where's our resistance area on oil? Well, in accordance to this, it's got some room. It's still got some room. Looks like it could be through that. That's the monthly. Weekly is not quite as easy to see. There could be some points up here, but it looks to me like oil has got possibly another. Well, the 88 makes sense if we're doing that 11, 11, 11. So 88 on oil may well be on. So we might start to see oil push into this area. So not really too much for us to do. If we're gonna trade the safest possible way, which is just wait for our price point. You know, as I say, even though it does look like it's going to get through some levels, I'm just going to bring up the news and data and tell you why I don't think it will be going through too early. It does look very, very heavy today. So let's have a look at some data and see why it could hold. This could enable a hold. So what we've got today mainly is this non-farm employment change, and this is going to be pivotal really, because the market's got this expectation of Jerome Powell doing some tapering, you know, sort of having some sort of tapering issue. We'll get to one other sort of aspect of this in a moment. But the non-farm employment change, big number today. So does that suggest the market is going to move? No, for some reason this has got all out of sync. So let's make sure this is right. Yeah, 8 is right. Okay, back to the calendar. And yesterday's numbers, PMIs from the ISM. Also looks like they had some inflation bits and pieces there. ECB President Lagarde. Now, I didn't know about this, so I'm not sure what she said. I don't think what she said was the market mover. I think the most likely market mover yesterday was the talk of the debt ceiling. We had Joe Biden out yesterday and effectively saying, you know, give me the ability to raise the debt ceiling, because if I don't have the opportunity to raise the debt ceiling, then the US is potentially going to default on payment. Now that is obviously bad for the market, and it has put a lot of pressure on it. Hey Lewis, how you doing, buddy? Now with that pressure on the market, now Lewis, you're a bit of a gold bug. So now we do need to talk about gold. I was going to wait for Ainsley, but I do think this is quite poignant. Look where we are with gold. In fact, let's look at gold and let's look at Bitcoin. Let's look at Bitcoin first. Huge moves to the upside on Bitcoin. There's a big question for me about Bitcoin of whether, if we get an out and out fire sale on equities, will Bitcoin outperform? Because the normal state of affairs is that if things get sold off, everything gets sold off just to cover kind of positions. I think the difference with Bitcoin, and the difficult thing to know, is yes, okay, the institutes are starting to get involved, which is a key aspect. However, the tricky part with Bitcoin is because the type of people that are historically involved in Bitcoin are of a different generation. They may not hold equities and not have this kind of this need to part with their cryptocurrencies. If it starts to fall, they probably will part with their cryptocurrencies, and there are probably still a lot of people using some leverage. So some leverage accounts could get closed down if there's some outages. So this is the question I've got with Bitcoin. Does Bitcoin hold? Or will it have, if there's a fire sale right across the board, will this one suffer as well? And if we compare it with gold, then it's holding up pretty well, I think, as the alternative. Look at gold. Where are you, gold? Let's go through my X's. Oh, here it is here. This is what we got in gold. Now, this inverted head and shoulders here, still just about in play. And look at where we are as well with the inverted head and shoulders. We're right on top of it. Have to say, though, yesterday, I liked gold quite a lot. But look what's happened subsequently. It's just starting to come down again. And this held once yesterday. There was a little bounce here yesterday. And it's now crashing through. And now, if we compare that to the dollar, this is the reason why. And I think what's going on with the dollar is some nervousness about the inflation picture. With oil going where it's going, then the dollar is boosting higher. But you can see that those labor numbers they're going to be quite key. So the big question is, does the market crash before those numbers come out, or does the market crash before the numbers come out? And do we say that this is unlikely, or do we say there's a bigger story today? Because the bigger story could well be about the debt ceiling, and the debt ceiling would suggest that it doesn't matter what happens today with the labour market. The market is going to be coming down because there's just enough nervousness out there to take us lower. VIX is continuing to pop to the upside as well, so you can see that the volatility index is look at that. I mean, there's just something moving in here. The chart says it holds here, and the timing says it holds there until at least 1:30. But what's the overall sentiment? And sentiment can be very, very strong. Momentum will carry this down before that news comes out. If we're not on a general level playing field, and we're not because of that debt ceiling situation. A channel on the D1, probably false break. So you're looking at, is that gold, Lewis? I'm going to show you my others, because what I've done with gold is I've taken hedges just to protect against the downside here. So let's have a look at this, just so we can look at it clean. On the D1. Yes, yeah. Now, So this is what I was looking at yesterday, Lewis, which is what I've just taken out the hedge just in case. But is it a false break? Or are we just right? Because if this holds, this is going to start looking really good. Look what we got here. Lots of things stacking up here for the price action and the technical pattern with gold. We've got a left shoulder here. Got this left shoulder here. We've got the head here. Now this right shoulder could do with taking a little bit longer. When we count these bars here, you've got probably one here. Actually, let's not do it like that. Let's not do it like that. Let's just draw this up again. So here's the inverted head and shoulders. And I'll tell you what I'll do instead. I'm going to use this other measuring tool here. Bring in the objects. And what we've got is probably we could start here. That looks like the area for the shoulder, which gives us a couple more days. I've got a little visitor after some clothing. One second, guys. Right. Okay. Sorry. Sorry, it's a false alarm. Anyway, so this looks like a couple of days here that we could be waiting before we start to see that gold move to the upside. But you might be right, Lewis. This could be a false break. And I guess what Jeff may well be looking for here, if he was in and he was trading gold, I guess he'd be looking for this to come back into this area and then pop back to the upside. And if that's to happen, then what I'll probably do is I'll leave the hedge on and see if there is some more downside. And you know, as I say, if there is some more downside, then I might just put stop losses on the hedge and see if I can get through both of them. I don't understand why gold is not getting the support. Now, I don't know whether that's because of Bitcoin, which is why I brought it up. You know, has Bitcoin all of a sudden taken the place of gold as the inflation hedge? You know, because inflation is obviously in place, but the issue with gold, and this has always been the issue with gold, is that we've got. Let me see if I can put this in. All right, US 10 years, so US. All right, this might be okay. No, that's not good. So really, we need to put up a chart of the US 10 year. All right, let's see what we got. Explain that. Should be able to go to the Financial Times for you guys if you're looking at that. Here we go. So let me show you the US 10 year, because we need to watch this US 10 year as well. No, you got that? No, you got the wrong one there. This one. Let's do it like that. This will be a bit easier. So we've got the US 10 year here, and the US 10 year. Look at the spike up here. Now, if we were to compare this, now you can see it over. Let's do it over a month actually. Over a month, you can see that around about I don't know, September, sort of like the early September, we've seen this spike up here. But really, it's been going on now and since August. You know, that's when it bottomed out. It bottomed out in August, but then a month later, it started to get this spike. Now, if we go back to gold and have a look at what happened here, the move to the upside with gold here it topped out again in that first week actually. So this is still August here, but it was starting to top out there. We started to get a nice little boost up in August, but then as soon as the 10-year really took off, this is what's been happening with gold. So you can kind of see that the correlation's more about extremes than anything else. So are you still looking at that sentiment cycle, Lewis? I mean, don't get me wrong. I've got I've got very little kind of confidence in what to do with gold. I just haven't got a clue. It looked to me yesterday. This is what I was saying the other day. I was saying the other day that I wanted to see gold pop through this area, come back into this area, and then start to see an inverted head and shoulders. And this is the reason I took the trade long. Now, the only reason I've taken the trade short to cover the position this morning is that that I just saw the dollar just take off. Now, the environment that I want before data is for it to be really beyond my price. So it makes sense to me just to protect the position and then fix up whichever one doesn't work out. And try and take that one off the market, and you know, it will be a bit of work, but I'm okay with that. I prefer to kind of get my hedge in nice and early, which I've done here. I've got a long here, and this is the short, so they're tight. You know, I've got really tight. Even when you go down to the shorter term time frames, I've got a pretty tight position here on the hedge. But if this area were to hold, that's going to look pretty good for some upside. And the hope is that I can get this hedge at with a stop loss before that data comes out. And if we blast off, then we might well stay blasting off. And I think that probably will be down to the news. You know, I think the news and the data point will probably be the catalyst we see. But you're still looking for downside, which is also fine for me right now. And if that was the case, then really, you know, as always, I'm going to switch these longer term timeframes and make an assumption of where this is coming to. It could come all the way down here. I'm not sure whether that would be the case or not, but I think that when I looked at this as well earlier on, I looked at this and I thought, you know what, that what we've got here is a trend line and a current area here that if this took a few weeks, the trend line may well correlate with this particular price position here, because there is some support here. You can see that there's quite a lot of support there. So at that point, you know, the hedge is looking pretty good, and look how close they are. That's a pretty close position there. So if it does bounce here, then I can potentially put it at break even and just ignore it. You know, that's what I want to do, because I really want gold in the portfolio just to kind of have some protection. But trying to trade it is tough. It's really tricky. You know, trying to trade out gold, but it'll work itself out, no doubt. So solely looking at the sentiment cycle, I see it very similar to last peak and falling. Yeah. Well, yeah. I'd go with that. And if we bring up the sentiment cycle as well with gold, then you know, you'd have to say that your theory there does make a lot of sense. And if we bring it in here, here's the sentiment cycle here, and you can see. Shall I boost this up? I might be able to. This is what Lewis is talking about. You know, we may well have had that enthusiasm phase, and then we get this subtle warning, and it just starts to move quite significantly lower again. So let's bring the chart back in and have a look how that goes. And look at this. This is the return to confidence, if you like. This is the big enthusiasm phase, and what Lewis is sort of like saying is that here's your subtle warning. And there could be you know, a pretty big move lower from this particular point here. There you go, enthusiasm, pretty big move lower, and we haven't reached this kind of discouragement phase yet. So that may well be the case. That may well be the case. So bit of a journey to be made on that one, I think. Now, the other thing that I think we need to take into account, and what was it? Yeah, the problem is, and Jeff and I were talking about this a few days ago, the fundamentals just seem to be shifting. Yeah, I agree with you, Lewis. And as I say, you know, when did gold become such a useless hold of a you know, for the value of money? You know, when did it become so unloved in a way for that? Because only really last year we saw this huge move to the upside with gold, and ever since then it's just been. And I don't think it is a Bitcoin story. I think it's a gold story, but and dollar story. But what we've really seen with gold is just price action which can't get going at all. Now, back from 2018, it was 11, and it practically doubled in price over the course of what is nearly a year. So where we look at all these other kind of asset classes like cryptocurrencies and see the volatility and say, you know, that's where you make the big money, it's just not the case. You know, there are enough other things out there that do make the big money, and you could avoid the crypto market altogether. Look at natural gas. Unbelievable moves in natural gas over the course of the last year. It was down here at $1.56, let's say, and now it's all the way up to $6 within a year. You know, this thing has gone up by 4 times, which is just astonishing. And if we look at oil as well, you know, I think Jules was talking about this on Sunday. You look at oil as well. Oil's been on an unbelievable run, down from 16. The very, very lowest point down here was around about $7, and currently it's at 70. So that thing's 10x'd in a year as well. Now I see Ainsley is in the room with us, which is grand. So now we can have a true professional kind of tell us what their opinion is on gold, and see what she thinks. Now let me bring up again. So, and I think coffee, you know, this is something that Julian trades. That's doubled in price as well. So there's lots of stuff out there which does do it. So there's no question that when gold gets a wriggle on, anyway, it's no question in my mind, I should say, that when gold gets a wriggle on, it is going to go. Is this a consolidation area? Is it a turnaround point? Is it the sentiment cycle? Is it starting to reverse? Difficult to know. It really is difficult to know. But what I do know is that I want it in the portfolio. I want it doing its job, which is kind of protecting other assets and protecting what is cash. You know, by making sure it's put into actual money. Without crypto, BTC around gold may be different. Yeah, well, that's the question, isn't it? That's the big question. Is it really about crypto? I'm not sure, mate, because if you think about this from this point here to this point here, and I'll mark it off on the chart, gold practically doubled in price between that period. Now, obviously, if we were to bring in Bitcoin, Bitcoin went from, well, the very lowest was 6, the very highest. So that's doubled in price in this same period. What's happened since has been astonishing, and maybe that was the thing. Maybe in this area here, Bitcoin and cryptos were relatively unloved. You know, this is a very, very different looking area than what we've seen subsequently, what we've seen here. So it's possible that it's kind of lost its shine a little bit, and maybe they don't kind of coexist together. You know, difficult to know, but I still think that there's a case to be made to have both. I don't think one or the other would necessarily be the wisest choice. So you know, if gold needs to get more unloved, fine, no problem at all. And see if that can start boosting up. FTSE 100 has got stuck a little bit. Now, we could have taken the trade and we would have been already in our profit line. But what we're going to do now, or what I'm going to do now, is have a look at this area. Oh gosh, missed it. Missed it because of the chatting. So it's actually tested this area once already, which is a bit annoying. We could have made our money there. Okay, it might still come back in. If it pops back up here again at some point, then we can definitely take the trade. but and now it's not looking like 7,000's on. It looks like it's going to be significantly lower by the end of the day. Now, with this is one of those days you only look for downside. Are banks like Goldman still happy to buy the Aussie if the Aussie dollar becomes expensive? Ross, is that what you mean? or are you talking about something else? Do you mean XAU or do you mean the Aussie? I mean, if we're talking about the currency, what we had overnight was the RBNZ raising interest rates to 0.5%, and look at what happened to the RBNZ, which is really to the Kiwi, which is really quite it's almost counterintuitive. What should be happening when you see an interest rate rise is the Kiwi starting to strengthen, but what we've actually got is quite the reverse. So look at the euro here. So things can start to get priced in, and it's starting to look like that. It's starting to look like it is priced in currently. It was currently priced in the euro strength. The Kiwi strength. So now it's going in the opposite direction. Now, if we're talking about the Australian dollar, when you say if it becomes too expensive, I'm not sure whether you could. You see, looking at this, it's getting pretty close to an area where it's absolutely not too expensive. It's a buy zone, not that far away. It looks like it could come down a little bit further. And when you look at the technicals, it does look like it's on its way there. I was looking really for an some Aussie upside this week. The COT data suggested upside, the seasonality suggested upside, but the charts currently aren't suggesting upside. And what's going on globally is certainly a risk-off kind of sentiment, and inevitably that's going to affect the Aussie. That's going to affect the Aussie negatively. So that's the state of play. If it comes back down to here into the 0.7016 or 7020 or something, that's going to look like pretty good value for the Aussie dollar. But it will depend on the overall kind of terrain. So nothing is too cheap or too expensive, really. So Goldman would be happy to buy the Aussie if they think that there is expansion going on. They won't really worry about too cheap and too expensive. If you were to look at the COT data charts, the two main players are the commercial traders, the ones that have got kind of skin in the game when they are where they can touch the asset. So if we're talking about gold, there'll be the miners, maybe the jewelers and people like that. You're looking at oil. We're talking about the drillers, the people with that own the rigs and all sorts of things like that. They're the commercial traders. They're the ones that it really matters what happens to the price of the commodity, because it matters to their profit line. But on the other side of it, you've got the non-commercials, the likes of the pension funds, the hedge funds, the banks, and all these other guys. And if you were to look at what they do, all they do is find the trend and just buy and buy and buy and buy. Now, it looks like they're doing something really silly because they end up buying at the high. But we have to remember that they've... Gold, sorry. Okay, yeah. Gold... okay, I'll just finish this piece. So it looks like they're buying really high every time, but they're not, because they've been buying all the way up. And what they're looking for really isn't what's happening so much on the chart. They're looking at what's happening fundamentally, and that really does lead us into the point with gold. Gold is not too expensive if it's providing functionality. So what the function has been traditionally is a store of value. That's one of the major functions of gold, is a store of value, and what that means is a store of value is if you've got $10 as an example, if you've got $10 and your let's say your basket of goods is currently costing you $10, then the value of your $10 is staying the same. However, with inflation, what happens is this basket of goods goes up to $12. So actually your dollar is starting to devalue. So what people will tend to do is, because gold is it tends to be something that will also go up in value. People will change their money for gold, and as the price of goods goes up and gold goes up, then actually you haven't lost any of your wealth. So if this was to go up to 200 and become really expensive, and gold is all the way up to, just as an example, it's at $3,000 per ounce, it won't matter that this is getting seemingly too expensive, because the prices of things are still going up. So that's why it's a store of value. It tends to protect against inflation. But the problem that's been going on recently is that the inflation has, I guess, in a way, kind of like been discounted with. Oh, sorry. Get rid of that. The inflation's been discounted with some of these bond yields. So gold is not functioning the way that we've seen it function, traditionally as yet. So things like the debt ceiling will probably, if the debt ceiling gets raised, that will probably be good for gold. Now, if the debt ceiling doesn't get raised and the US default on their payment, that will probably be good for gold. So this is the thing. When you look at in the background, you look under the hood, there's things that suggest, certainly to me, that those two things aside, maybe it all gets sorted out and it's not quite a big a deal as it should be, because what's happening is the US has just started. I think it was on the 1st of October. The US started its financial year, 1st of October, financial year. Now, what happens during a financial year is you get starts in the US. Now, what happens in a financial year is you get budgets and you get spending and all this stuff going on. Now, how is this going to be paid for? They've always got two options. They can borrow to pay for it and kick it down the road, or they can raise it through taxes. Now, the borrowing is already at a pretty critical level. They've already borrowed to the nth degree. And this is what the debt ceiling is. They have borrowed to the point where they shouldn't really be, well, they've stated this is our ceiling of borrowing. We can't borrow any more than this amount. So the next possible idea is to raise taxes, so put taxes up. But the problem that they've got, corporate taxes and everything else, and this has been broken down in the US government, the Treasury have broken this down, how it's going to be done. And this is the way they said they're going to do it, corporate taxes. But the problem with this stuff is that it doesn't raise enough money for the plans. And one of the reasons for that is that COVID has depreciated their reserves, to the point where they've got very little option than either raise taxes so high that people can't pay them because they're already under pressure, or they raise the debt ceiling. Now, if they raise the debt ceiling, they're allowed to borrow more money. Now, raising the debt ceiling puts even more pressure, not only on the US dollar, because it means that there's going to be more and more in circulation, which devalues the dollar, but also on the US economy, because when do they pay these trillions and trillions of dollars back? And how are they going to do it? It's getting out of hand. We've had it once already. The US dollar used to be it used to be coupled with gold. And because they borrowed and borrowed and borrowed, it got to the point where it was evident that it couldn't be coupled with gold because there wasn't enough gold in the vault to account for the amount of dollars that were out there, because the dollar was an IOU. It was an IOU for gold. And you could go to the bank and say, I want my gold in exchange for this dollar, and they'd have to give it to you. But then it got to the point where they borrowed way too much. They printed too much money, and it could no longer be backed by gold because there wasn't enough gold out there. So we went on to a different system, and then the dollar becomes the reserve currency. And this is where we're always, you remember a couple of years ago, we had a government shutdown because Donald Trump wanted to raise the debt ceiling. Every new party that comes into play wants to raise the debt ceiling because they are not getting this stuff under control. They're not getting the fact that they need to, that they're making enough money through taxes and other avenues to pay for the things they want to pay for. So they just raise the debt ceiling. And this is where you start looking at gold and saying, how can gold be too expensive when it is really one of the only, and I say one of the only because there are other ones that have emerged like Bitcoin, but it is really one of the only true stores of value of what money is, because the dollar is not. And whichever current country you live in is not a store of money. It's not money. It's just, I don't know what it is. It's currency, which is a different thing entirely. For money to be money, it's got to be finite, and this is why Bitcoin works, and this is why gold works, and this is why Bitcoin was effectively invented. So I don't know. It's difficult to answer whether gold will ever be too expensive, because what we don't know is how bad this stuff's going to get. Now, we've been looking for a breaking point for quite some time, a break in the system where the system just overexerts itself. And that just appears to be what's happening. The system's overexerted itself, and there may well be a change in the guard, from here on in. It's just difficult to know. And this is where we sort of like start going, well, gold's got to play a part here. But and at this point, I don't think gold is too expensive, anyway. What we've got over here, let me bring in the other chart just so we can see it nice and clean. What we've got over here, I'm going to bring this chart in because we can see more data. But look, this is a support level. There are other things here which suggest it could come down lower. Now, if the question is do Goldman Sachs still buy when it's up here and getting really expensive? And the answer to that has to be, we'd have to know where we are at the time, because they may. Nothing is ever too cheap or too expensive. It's all relative to the current terrain and the current picture. And it really does depend on what we see the picture being right now. Now, the charts are telling us that the picture is that the dollar is going to strengthen. The US dollar is at this point now where we've got this inverted head and shoulders. It's a complex inverted head and shoulders, this W pattern. That's what W patterns are. They are complex. And the reason they're complex is that they've got multiple moves. But this is still a big head down here. This is still accumulation. It doesn't matter what we call it, but it's still accumulation. And where we are is at a neckline. Now, if that neckline goes, the suggestion is that the US dollar, in accordance to the inverted head and shoulders here, is going to be somewhere popping up around about here, if that gives way. So that it looks like there's more room to run with the dollar, around about 97 probably to the upside on the US dollar. But head and shoulders patterns don't tend to work out. And one of the technical things that I like about gold is the fact that we've got an inverted head and shoulders here on this daily. You see this here, the inverted head and shoulders here. Oops, that's a really bad right shoulder, but you get the idea. Let me make these ones bigger to make it more equal. There we go. You got this inverted head and shoulders here on the daily, and what we have is a trend line here. And what I really like is when the right shoulder breaks through a trend line. So that's why I've taken a position here. And yeah, okay, it's hedged right now, but I don't intend to keep that hedge if I don't have to. I'm hoping that this is going to start moving to the upside. But there are things at play. There are things going on out there that just make this really difficult. And it might be that something like gold just becomes way too difficult to trade. I suspect it won't be the case. I suspect we're probably going to be okay. But it might be just that it's too difficult. FTSE 100 is cruising now to the downside, and it's still okay for us because if it starts to pop up, we've still got an area that we can get involved. No problem, Ross, at all. No worries, mate. Right, now, is Ainsley here? I thought she was here, but maybe she's not.
She is. She's not going anywhere.
There you go. How are you?
Oh, we're getting very excited, very excited. The girls went back to school yesterday. Tick.
Okay.
We're coming out of lockdown because we hit 70% double dose today.
Oh, brilliant.
New South Wales. We've just ignored the rest of the other states because they just don't play ball. So we're doing well, yay. And I think tomorrow we'll hit 90% single dosed.
Okay. Okay, that is really good.
So we're doing really well, really well. But yeah. No, I've been listening to you on gold, and it sounds very good. I just want the US dollar to collapse because Janet Yellen's already written to the government and said, we're going to run out of money. And I mean, on the backdrop of all of that, Ash, and we spoke about this, was it last week or the week before? We've been talking about this as far as the US dollar is a basket case at the moment. The way it stands, it is a basket case. And it's not, is it the 14th of October? 14th of October, they've got some repayments, and they're looking at perhaps just going up there.
Well, is that just a threat? I mean, that's the thing, isn't it? Because I know Biden's come out and said, we can't pay. But is that just a threat to force the Republicans into raising the debt ceiling? And it's
Janet Yellen wants to get rid of the debt ceiling altogether. Let's just rub it out.
Yeah.
Ceiling. Let's just keep going.
Yeah.
It's all right for her.
I saw this trillion dollar coin that they want to introduce. I mean, they make it, as you say, that it's a basket case, isn't it? I mean, they're making all sorts of suggestions. I suppose that the issue that we've got is that regardless of what we know is kind of moving, timing the thing is proving difficult. I got in again yesterday, and I've had to hedge the position because gold just didn't continue, and I don't even know whether the news point today. I mean, look at what's happening with the FTSE. So what would happen on a normal day is that when you have a relatively important data print, which ADP is, it's relatively important because Jerome Powell said he's focusing on labour. And what would tend to happen is you stay in the range, and then you get the news, and then all of a sudden it goes. But this debt ceiling thing, it seems to be the big hangover that we've currently got going on. And then the FTSE has already moved near 1% over the course of, just less than an hour. It's already moved 1%. Now, it's difficult sometimes for the FTSE to move 1% in a day, never mind over the course of an hour. So this suggests that by the end of today, we could be down 2-3% on this, and I'm really keen to get involved for the downside. But I was chatting. It's very rare that I miss a trade in the FTSE, but I have this morning. But hopefully,
Louis Vuitton want their basket design back, please.
Louis well, that's the problem, you see. I end up kind of getting my apron on and become Picasso, and then I the important stuff.
Oh, okay.
So,
cool. Excellent. Well done. But yeah,
you like that?
I think if you actually went back and looked at what has happened on the Nikkei today, you'll see that even Japanese stock, and it's an Asian story that has actually has just, what are you looking at there, Nifty?
Is this the oh no, sorry, that's the Indian market.
Yeah, that's not going to help. The Nikkei, the Japanese one. So even I was just saying to Jules earlier, I said, so why didn't I short this last week?
Wow, look at that. Yeah, this is a daily chart.
Yeah,
this is a daily chart. The Nikkei is down 10% from the highs already.
Yeah, so it's a bit of an Asian story, I would hate to say, but it's a bit of a fallout from just everything that's happening. I mean, Japan also just having a changeover of prime ministers, but you know, the whole tech stock hooby doobies, and because we did have a rally on the S&P last night, but then it pulled back. And it continued, the pullback has continued with the tech stocks down. Now, the tech stocks are a big component of what's happened on the equities market. And it's continued with this going down. Supply chain issues, supply chain logistic issues all over the place. Oil popping up. Yay! Oil popped up. Whoa, did oil pop up? You know, I mean, you didn't need to be Einstein to know that OPEC plus for that cartel were going to hold that 400,000 line, 400,000 barrel per day increase as agreed. No, they won't be very happy. No, Ross, they won't. But hey, look, I'm trading gold, so I'm not. I'm keen to see a bit of a collapse on the US dollar and take a bit of pressure out.
Do you know what? I think Lewis makes a really good point here. When a person goes broke, they start selling gold, jewelries, and stuff like that to I guess the pawnbroker. And if the US government goes broke, they too can sell some of their gold reserves. And I think that's a really good point. It's a real fair analogy.
They've done it before, and that's the thing. It will happen. You know, they talk about selling the family silver, but you know, in this, it's the country's gold. So they've got something tangible to sell. It's not like they can go to their wallet and sell their Bitcoin, is it? The US government can't do that.
No. Well, they don't have any. I tell you what, El Salvador are looking pretty clever right now. I don't know what they've made, but you know, Bitcoin is currently up nearly 30%, and they were buying those dips. So could get an El Salvadorian government and country eventually being the biggest country on the whole planet just because they bought a load of Bitcoin. I tell you what, they're looking pretty clever, I have to say. They're looking like
they are. They weren't looking very flash when they did it, mind you, but that's the thing. But you know, it is quite a possibility that it will fly. And if only Venezuela had done the same thing, because they're just on their knees as well. So Venezuela has stopped using, many of the retailers have stopped using their local currency and will only accept US dollars now. So
do you think I mean, if you know, let's go back to gold, because gold's the gold's the one that I, you know, I'm the most interested in. I've got it now. I've bought it now, and actually things are, even though I've got my hedge on, it's a good position for me now, because I've got the short on just tight enough for this to be in pretty good shape. From here,
look, there's two things. That you're looking at a weekly chart. Yes, you are. And it's sad that I can recognize that without
get
a life. So go back to that weekly chart. If we get a close at the end of this week above that pin bar, that tiny little pin bar that was last week, we've got a higher low in place.
Yes. Yeah.
Okay. So we're going to close up there. The US dollar is for whatever reason is rallying. bond rates are going up, and bond rates are enough at the moment to, even real bond rates are better than they were.
Yeah.
So, and when I speak about real bond rates, I'm talking about bond rates less inflation to give us the actual, because they stepped up quite a bit and quite quickly. So gold did take a hit on that, but it is anti-inflationary. Sorry, it is an inflationary hedge.
Yes.
It is meant to be something to protect the store of value in a reserve currency. So like I said, and I know, Ross, it's all very tongue in cheek. I'm waiting for Armageddon with the US dollar to collapse just enough to sort of like bounce this up to, you know, $3,000, maybe $4,000.
Oh, that'd be amazing, wouldn't it? So do you know what I thought was quite poignant, what you're just saying there is that actually it's the weekly that we're interested in. We're looking to see whether this can hold. We're not interested in intraday trading here. What we're interested in is the longer term time frames, because this still looks like an inverted head and shoulders look about it. It looks like some accumulation has gone on here. This bar suggests an absolute rejection of this level, and a pretty strong one. And this bar last week, it was pretty good. I mean, I don't know. I know it's not going to be the best look, but let's just quickly check what the volumes are here. Volumes last week. Okay, not that impressive.
No.
Yeah, volume's not giving us a whole bunch of extra help there, but still.
What we're saying is, volume aside, it's holding the line fairly well. And with that large pin bar from the 6th of August, week of the 6th of August, there that we've bounced off and gone down and retested, and that was after non-farm payrolls posted a really, really good number.
Right.
And I just think a lot of stops were hit as well, because
Yeah.
that flew down and flew back up again in about the space of about 10 minutes.
Mm.
And then it just sort of went chugga, chugga, chugga back up to that 1832, 1834 mark. And then it just sort of like fell back in on itself. So what we need is not only just to break above, back up over the 1800 mark, we need it back up over that 1835 and clear. That's the level above. So
right.
That's where we need seasonal. And I know the hot data looks pretty good. Seasonal from here on in. This week we should have had a push up. We didn't get it. Right. And then it's meant to be pretty choppy until my favorite time of the year. Most people think that's Christmas. It's got nothing to do with Christmas. And, you know, I do actually have only gold colored ornaments for my Christmas tree in tribute. So we'd like to be all coordinated and focused on gold. So it's not until towards the end of the year. I hope that we see a little bit more of towing the line with seasonality, which should be good.
Yeah, it hasn't done that, has it? So what would be really good for us all is if it could stabilize in this area, get choppy, but get choppy up here rather than down here.
Slowly drift up, slowly chop, and then as soon as it breaks, by the time, you know, the 27th of November and the 16th of December roll around, we cleared the sticky feet area, and we're just going to have a nice, beautiful move and trend upwards to the right and up to 4,000.
Yeah, is that a genuine price prediction, or is that more hoping?
I'm just being incredibly optimistic.
Okay.
But it, you know, having said that, if that jolly US dollar starts to collapse, it could be on for young and old. Okay.
All right, that's good. Okay, well, I think I'm feeling a bit more relaxed about this then. So really, it's probably Friday, and actually that would work quite nicely if because it would be peculiar. I mean, as I say, that the FTSE started to move in a way that is a little bit out of sync with data. at this particular moment. ADP non-farm employment change later today, which is going to be relatively pivotal. Then we get on Thursday nothing of huge note, but on Friday we do get a non-farm change.
Yes, non-farms.
Yeah, and I wonder whether this might be the time that we can get a better assumption on gold, because that's right in the middle of the day. By the time that that's happened, if gold has given us another, I mean, it'd be great if it comes down here for the next couple of days, bounces again and gives us another one of these bars. That's going to start looking pretty positive, isn't it?
Yeah, and it may well do that, because the US dollar doesn't seem to be pushing back.
Not at all. No, US dollar is very, very hot, but the US dollar is getting very close to this neckline, and we know what happens in necklines. They tend to fail. So I think Jeff picked out this area actually, but this is looking like the area of a potential sell zone. And as you say, this correlates not, and we're looking at a weekly chart here, correlates pretty nicely with gold. I mean, that would be, what's that, 94. Actually, there's not that much in it. There's not that much left to go with that. Probably about 1/3% maybe. Gold to come down to the same thing at the lows.
It's in that zone anyway.
You're right. It is in that zone. So yeah, I'd agree with that. It might even be the lows. Yeah.
Sorry, I'll just ask Lewis quickly. Is that 5,500 by the end of the year? And which analyst actually said that? Because you can hear do I hear 2,000? Do I hear 3,000? 3,000? Can I hear 4,000? There's this auction going on about where people think gold is going to go, and we all know that. Jules has read a report that he was listening to an analyst who really believes it's going to go to, what was it, 12,000?
I think he said 10. But yeah, it's still crazy high.
It's still crazy high. Yeah.
So
who knows? But the idea is we want it to go up, don't we, Ash? We want it to go.
Undoubtedly. Do its job. Start doing your job, gold. Stop lazing about.
I've been waiting all year. I don't know.
Do you know? I mean, I've
got things to pay for. So
I'm getting to the point where it's becoming so difficult to trade. I might end up ignoring it altogether, because I tried last week and I made a measly amount of money. But it was protection. I had to close it because of the protection. This week I've tried, and I'm currently in the negative. And I don't know if I can fix it up. Great. If I can't, then I'll have to take the shot on it, the hit on it. But it is getting to the point where it's just not doing when I expected to do something. Debt ceilings and all that stuff. This should be flying really. With the concern that's out there, but it's just not performing. So yeah, I might end up putting it on the back burner for good if it's not careful. If you're not careful, gold. Okay, thanks. So 27th of November, is that the right date? They're saying okay, 27th of November. Okay, so we've got about a month and a half before gold starts to hit that kind of seasonal bias.
Now the other thing is with that 27th of November, it doesn't always take off upwards. It can take up and then it can come back again, and before it takes off again for December. So 27th of November is the first that date, not specifically, although gold is very good at being on that date. But it's sort of like just be wary. It can come back and bang, retest and go again, a week and a half later. So yeah, just be careful in there. But yeah, we'll only start working from there because it's just, I've got it booked in, It's got to start working then.
Get it booked in. Okay.
I want to go into oil. Oil's moving on me as well, actually. At the moment, I'm long oil and it's just had a bit of a pullback. You bugger. Anyway.
Yeah, good choice on oil. Would we say 88 is on now? We've cruised past 77, 88 on.
We're coming back to have a look at 77 by the looks of this. Have a look on a 4-hourly. If you won't mind.
Look at how clean that is. Oh, okay. I know we have this pin here, but lovely close a couple of weeks ago. Yeah. Oh, yeah.
So just having a bit of a look-see down around here. We've broken some levels of support and resistance as well. So. But yeah, off it goes, off and running.
Yeah, it's definitely off and running, isn't it? So oil is another thing that is playing a part. Yeah, it does look like it's going to come and test, isn't it? The 75, 76, something like that, 70, 77, 76. Yeah, it looks like coming down there. I would not want to short that bad boy though.
No, because it might be a shallow retracement, like we were talking about last week. I think we were talking about oil was looking like only a shallow retracement, and bang, off she went.
Yeah. Thanks, A. Okay, that's amazing. Well, I'm going to try and get into a FTSE trade if I can. It looks like it's well and truly gone without us this morning, but shouldn't have taken the eyes off the ball with that one. But that looks like it's. Let's have a look at the FTSE. Just a quick look at where this could come to, and certainly this point down here is the place I've been eyeing up. But we are now.
I'm going to have to love and leave you, mate. I've got another 7 o'clock meeting.
Oh yeah, no problem at all.
So
no problem at all.
Bye everyone.
Yeah. Thanks, A. Thanks a lot for popping in.
Bye.
Okay, so we're going to be wrapping up now anyway. But look at the FTSE again. You know, you've got to take into account these technical areas, and the technical area on the weekly suggests we are back into this kind of buy zone point. There might be a little bit further to come down. It looks like where's that? If we clean this line up a little bit, it's probably that one's gone. But we're going to leave that one in. That was a retracement point. It looks to me like it's there. That looks okay. So it looks like it's got about another 10 or so pips to the downside before a potential bottoming out. But you are looking at anything that bounces back up again as a look. That's a really nice level. Look at that. That one's in. That one's definitely in. And I would say it's probably 9 or 10 down, but this area down here starts to look well and truly in focus. Just to this point down here, that looks well in focus. So we may well see the fall in the FTSE right the way down to that point there, which we've been waiting for. S&P is going to be the same. Nasdaq's going to be the same. They're cruising now. And the great thing is, if you miss the trade on this stuff, which obviously, you know, so far we are not involved, or I'm not involved. If you miss the trade on this stuff, Nasdaq could be in a buy zone right now. It doesn't matter, because really what I'd like to do with the Nasdaq is buy it up, but buy it up much, much cheaper than where we are now. And it looks right now that possibility could come into play. It may not be until next year, but that's not a problem. So we can look at this as an investment opportunity. Okay, guys, I will. Sorry, Lewis, I've just got that, mate. Look at a root gold chart with a trend line. A root gold chart. What do you mean by that, buddy? Oh, my gold chart, yeah. Yeah. And what trend line on what, the monthly or a different time frame? It's maybe where I start buying back into gold at 16s, if it can drop. The white trend line. So this one here. We should just send to have a look at the gold chart along this trend line, and I'm guessing that's what you mean there. Yeah, this one. Yeah. I like this on the weekly. This looks pretty tidy on the weekly, and if that was to establish itself, depending on when it was to happen, you see how this area then is negated. The trend line negates that area. So now I'm going to go up to this one. Yeah, and it leads us. It does lead us here. It does lead us here, and it sort of says, "Oh, I see what you were trying to tell me." I think. Okay, so what you're saying is that the end of November, December time, I think this is what you're saying, is when these could meet. Is that what you're saying? So it could come down here and meet this trend line, which actually works quite nicely, because if we were to tidy this up a little bit and see whether that will work. So if we aim there, what does the trend line look like? It looks pretty good. And it's just a case of, rather than taking it from these lows, you take it from these lows, and then you've got a pinpoint area, and that's the first week in December. Now that I love, Lewis. I really like that. I really like that. And that would suit me down to the ground. I'll be more than happy to close this position down here, actually. Quite happy. Yeah, it does look pretty beautiful, doesn't it? So we're looking at around about 1670. It's basically this low, the low of this pin bar. Now I've got futures, so my low is 1673. So 1670 looks like the potential low. Okay, mate. Well, in that case, I'm going to ignore this chart for a while, see if that is to transpire, leave the hedge on, hope that happens. It will make it a lot easier for me if it does. And then if it goes up, I'm going to have to do some work and then maybe close the positions altogether. Yeah, 1680. Yeah. Looks about right to me, mate. That looks good. I like it. I would say that out of the two of us, you are a much better gold chart analyst than I am. So I'm happy to take your lead on that. FTSE has bounced at that particular point that we picked out. Could be a little long here with a FTSE, but I wouldn't want to trade it, I've got to say. So a bounce here is likely now on the FTSE, I would suggest. It's just looks like it's bounced off this low here. And when we were looking at it, it was easy to see on the 4 hourly. So we're looking at that level there. Look at that. Point there, and it's just about bounced on that point. So FTSE actually I was a little bit high. I was at 33. There we go. So it's bouncing at this particular point, which is the right area for it to bounce. Now, if it is to bounce here, it probably won't last very long. This area here looks like a potential caging, and when you go down to the hourly, it's the top of that area and the bottom there. So be very careful. We could get caught in a bit of a crossfire. That looks at this stage like a potential short. Cool, man. Okay, nice one. Thanks, Lewis, for your help on that, and we'll have another look at that next week. Okay, thanks, guys. As always, have a great rest of the afternoon, and I will see you tomorrow with Jeff and with our quizmaster John. Have a lovely time, guys. Be careful if you are not in the market already. Don't get drawn in just because it's on the move. It's almost one of those things you say, missed it, big deal. Tomorrow's another day. Have a great one, boys and girls, and I will see you in the morning. Thank you, Angel, as always, and